We start today's market talk. As AI scales, India's biggest winners may emerge from infrastructure rather than innovation alone. So the point is that if we are thinking that we would compete with the Magnificent Seven, etc., who are AI companies in respect of large LLM models and how they are creating modes for themselves, we can't. But India's winners will emerge from data centers, power, connectivity, etc. And the way to see it is the SpaceX. It is being viewed as a combination of aerospace leader, global communication platform, potential AI enabler, and infrastructure provider for emerging space economy. So that is why so much of money is going there. So it is not only relying on technology, it is also the infrastructure provider for that technology. Market is rewarding ownership of infrastructure layer that future technologies cannot function without. So we need to look at data center operators, power transmission companies, grid infrastructure providers, cooling and thermal management specialists, optical network providers, battery energy storage system, that is BESS manufacturers, etc. Because you can't start seeing ki, okay, so and so company is developing LLM, so we should start investing. That bus has passed. They are already ahead. So we have to see what we have got, and because let any AI theme come into India or AI software come into India, the it cannot work without this infrastructure which these companies have within India. So the market outlook very quickly. Markets have moved from pricing catastrophe to pricing uncertainty, which is a kind of progress. Simple. So the Middle East risk remains even after Trump's deal. For now, markets have reacted with visible relief, with a suspicion that there is a catch somewhere. But still, from a catastrophe that oil will go to $200, etc., and there will be a major problem, वगैरह वगैरह. So now it is only uncertainty, and market has moved accordingly. And once the uncertainty gets cleared more and more, it will keep moving up. Simple. So the stocks, bonds, and currency markets celebrated the Straits opening. It's a good news for inflation, current account deficit, corporate profitability, and accordingly, the equities, bonds, and currency markets reacted. And fall in crude prices give relief to RBI, but El Nino risk loom large on the horizon. US Iran deal boosted the markets and the rupee, bringing relief to RBI. El Nino impact on crude inflation is critical driver for inflation. So RBI would be hard pressed to avoid a rate hike in August or October meet. So we'll see. You will see now because of this relief due to the peace deal, the rupee strengthened. In addition, there were RBI actions also. So the rupee has strengthened. The bond yields have come down. So earlier they were heading towards 7 plus. Now they have come down. Simple. And now they have come down to this trend line. So let's see what happens. They took support here and then went up, tested the 20 EMA. So let's see what happens from here. And India VIX has come down. So equities have moved up. So this is the basic thing which has happened because of fall in crude prices, which has given relief to the Indian economy. Now, the other point is Accenture's guidance signals headwinds for IT sector. Accenture's results reinforce the view that demand recovery remains gradual. Revenue growth for Indian IT firms is likely to remain dependent on execution of existing large deals only, rather than rebound in discretionary spending. Now, you must understand there is a big gap between when the IT companies announce their results between deal wins and revenue realization remains, because a lot of orders gets delayed. So clients keep telling them we'll see what is the situation and then confirm. They may get a deal, but it gets delayed. So revenue realization and deal wins is two separate things. Now, data centers are emerging as an unexpected driver of investment, turbocharging demand for private power infrastructure. Very important. This is what I highlighted last time also. Hyperscalers and developers are investing in private power infrastructure located next to the data asset. Options are gas turbines, nuclear and small modular reactors, fuel cells, and battery storage. And that is why there is so much of demand for the products of Bloom Energy and MTAR. It is because people they cannot rely on the grid power to run data centers because the requirement is too huge. Hence, everybody wants their own assets. So, must keep that in mind. So, this we have seen. Now, FIDI data. FIs have been covering their shorts, and the shorts have come down. Though they are net short on index futures, they have sold calls and bought puts in index options. So they remain strongly bearish, and they have turned more bearish on Friday. Pros, they are short in index futures. So if you see here, they are short in index futures. They have bought calls and sold puts also. And sorry, they have bought calls and bought puts also, right, in index options. So they are mildly bullish because if you see here, put options plus shorts 1.33 and the call options are 1.43. So there are more call options. So they are mildly bullish. Clients, if you see here, they are long in index futures. They bought calls and they have sold puts in index options. They are strongly bullish. And then if you see last week, 15, 16, 17, 18, 19, the short positions in index futures declined from 2.41 lakh short positions to 2.21 lakh short positions on till Thursday, and then the markets recovered also and they turned bullish. So if you see every day the index was creeping up and then they turned bearish as I've shown you on Friday, added some short positions and index declined around 0.64%. So, but the short positions are still down. And next week, in case there is a progress on the US Iran deal, then we should see some short covering. Otherwise, they will pile on to shorts. So, coming to the US, optimism over US Iran peace agreement against two things happened. First was optimism over the peace agreement against a hawkish Fed chairman. So, two divergent themes. Peace agreement would reopen the Strait of Hormuz, send crude prices lower, lifting risk appetite. So Dow Jones made a fresh high, but Fed signaled a rate hike this year, pushing Treasury yields higher. So the Treasury yields, which were coming down, moved higher, and dollar index moved up. So it has crossed 100. So that should be a negative for emerging market currencies plus metals. Brent crude corrected and is now come down to, it went below 80 level. So it has corrected. And that is what is pushing the treasury, what should have pushed the treasuries lower. But now there is talk of rate hike, etc. So there is a treasury started going up. Now gold, to see, it has corrected now below the level from where it had spiked and made a high. Now what is happening is the first support is at 4,000. So it tested that, went up, tested the resistance, and then has started coming down. If it breaks this 4,000, then I think it will go to 3,400 levels. So one has to watch this because it will not go down that easily, but the trend is lower. Similarly, silver. So if you see here, it had from $50. It had taken a direct upward trajectory, right up to 120, corrected, and then it has been consolidating here, but below 20 EMA, and it's reached 64. So here again, if you see, it may take support at 60. If 60 breaks, then 50. 50 should be a good level for silver, but the trend is down. So it and the RSI is also trending lower. So it is people are booking profits here. Similarly with copper, nothing significant, just consolidating. Bitcoin also corrected, so the money is moving out from all these assets and moving into US equities. So to see Dow Jones, as I told you, made a fresh high. S&P was up around 1% but consolidated. Nasdaq made a fresh high. See the move of Nasdaq, continuous rally in a trend, upward trend, and now it has broken above the trend. So it is now getting into a different path of upward movement from here. And Dow made a fresh high, so it went up to 52,000. So, so this is what it is. Fed signaled a rate hike this year, pushing treasury yields, as I shown you, higher and sending stocks lower on Wednesday. But SpaceX continued to attract investors, and then chip makers benefited from enthusiasm around AI spending and reports of Apple, Intel partnership, etc. So US markets are doing well. Coming to India, so if you see here, Indian markets faltered on Friday as IT stocks plunged and global uh, cues weakened. Though index, that is Nifty, concluded the week above the 24,000 mark, which is good positive sign. It formed a doji on the weekly chart. So if you see indecisive right now, as I was showing you, that from catastrophe it has moved to uncertainty. So still it's a good move from 23,150 to 24,000. Uh, but there is an indecision that is normal. So if you see the daily chart, uh, it has moved above this trend line, downward trending trend line, and above the 20 and 50 EMA, and facing resistance at 100 EMA. So daily charts, so if you see, support should be at 23,850 to 23,800, resistance at 24,150 to 24,200, and above that it can head to 24,500. So I think if there is a positive news next week, Nifty should take out this 24,150 next week and try to take out 24,500, and after that it should be good. RSI etc. has moved. And the other good part was that the broader market is exhibiting greater convictions. I'll show you that later. Similarly, with Nifty Bank, Doji on weekly chart, again, but with a gap, it was up 1.53%. This is a better segment. So if you see the daily chart, it has gone above the first resistance and is trading above that and is taking, that was roughly 57,500. So it is trading above that and has taken support there. Even on Friday, it is above all moving averages. So if you see, it is above all the moving averages, which are also trending higher. So it is pointing towards bullishness, and RSI, if you see, is in a bullish territory now. So resistance should be somewhere around 58,000 to 58,200. Above that, 59,000. And then in case it goes above there, then 61,000, 62,000, etc. is possible. Support is at 57,000, which should be the low of last week, should provide some kind of a support. So it is looking good. Midcaps are now again closing in on the previous all-time high, was up 2.6%. Small caps were up 3.23%. So broader markets are seeing positive action. HDFC Bank broke above 800. It has to trade, and then on Friday it corrected because there was a dividend adjustment took place. So nothing to get panicky about it. Reliance, as I had told you, it has to trade above this 1310, etc. So let's see now how the market reacts on Monday towards the Jio IPO. And Bharti has broken out. It is above the 200 EMA. So it was up 2%. So it was a decent opportunity to buy at these levels, which we were talking about it. And now it has broken out. So if momentum continues, it can head to 2000 at least in this uptrend. and then we will see from here, and it'll move along with the valuations as whatever is expected for Geo, etc. Now talking about the key issue, India's data center and AI ecosystem. Firstly, India's AI related data center capacity is expected to grow at 35 to 40% CAGR between 2025 to 2030. So from around 1.5 gigawatt, it is expected to 8 to 10 gigawatt by 2030. So that's a strong growth. Every AI model, irrespective of who develops it, ultimately relies on a common set of foundational inputs. That is data centers, power, cooling systems, connectivity networks, semiconductors, and digital infrastructure. So, as AI adoption accelerates, demand for these enabling layers is likely to grow regardless of which application model or platform ultimately emerges as the winner. Most significant beneficiaries of India's AI build-out would emerge from data center operators, power transmission companies, grid infrastructure providers, cooling and thermal management specialists, optical networking providers, and battery energy storage system manufacturers. While the winners in the AI application layer remain uncertain, the demand for infrastructure powering AI appears far more predictable. And this is what the market is rewarding, the predictability. So let's start. First is L&T. It spans the entire data center value chain from EPC and real estate-led infrastructure development to reliable, increasingly renewable power solutions, advanced digital engineering via L&T technology services, and GPU cloud services through E2E networks. So GPU is graphic processing unit. So it is encompassing everything. It plans to add 200 megawatt of data center capacity across key hubs such as Navi Mumbai, Chennai, and Bengaluru. Nearly 50% of the data center capacity built in India over the last 12 years was constructed by L&T as an EPC partner. It continues to capture huge, high margin construction orders from third party global hyperscalers like AWS, Microsoft, and Google entering India. L&T Vyoma is positioning its upcoming facilities to handle high density artificial intelligence and high performance computing workloads. It has a formal strategic partnership with NVIDIA to design and deliver AI ready infrastructure. Its renewable EPC and its scaling green hydrogen electrolyzer business, currently upgrading to an indigenous 8 to 10 megawatt stack configuration, allow it to offer low carbon, highly sustainable power solutions to data center clients demanding green compliance. Its recent foray into asset-light design-led semiconductor chips creates long-term technological synergy with their sovereign private cloud offering. And L&T is presently trading at a P of around 35. Now, if you see the chart, this is a daily chart. It made a symmetrical triangle and it was trying to break out, but it corrected after the problem in the Middle East again started. But it took off uh, on Friday, last Friday, and then it has consolidated, but it has reached that 4,200 odd level. And from here, I think it should move up once there is more clarity. And if you see RSI is at 65, etc. Now, I'll point out how to enter and exit every time in every stock I'll cover. So if you see here, when it was at peak, RSI was above 70 odd, slightly overbought, and predictably it corrected. Then it became oversold, and then it has moved up, and stock has also moved up. Now it is consolidating, has reached this level. So definitely you must watch. Moment it goes to 75, 80 level, the RSI, that should be the time to take profits and wait for a dip to the nearest moving average to start entering, or RSI somewhere reaching 50, 60 levels. Next, Himadri Specialty Chemicals. Now it is making investments, 4,800 crore expansion into LFP, lithium iron phosphate cathode active materials and anode materials to support the EV and energy storage supply chains. It plans to commission a 4,000 ton LFP cathode active material plant by Q3 FY27 and has made strategic investment across the advanced battery ecosystem. Their core strength remains in coal tar distillation and the production of carbon black used in tires and industrial applications. refined naphthalene, and high-value specialty chemicals like anthraquinone and carbazole. They are expanding into high-performance materials for industries like aluminum, graphite electrodes, and automotive components. Their current value proposition is tied to India's EV manufacturing ecosystem and industrial self-reliance in advanced carbon materials. It's a very small part that LFP, which will go for battery energy storage system, is a very small part of the business. So it should not be treated as a data center related theme stock. Though present PE is around 45. So if you see here, Himalay's specialty, again, see it took off after the earnings and then corrected because there was not much of top line growth, but there was a strong bottom line growth. And then corrected and then it has taken off. And same here. So if you see, went overbought, sold off. Now if you get here at RSI above 80, 85, then how are you thinking of making money? Then it has corrected again. That gave an opportunity to enter again here, and then again it has taken off. So it became slightly overbought, and then it has corrected a bit from here. But the point is, it is a normal stock which is related to India's battery energy storage systems and EVs ecosystem and not related to data center. Next is Navin Fluorine. Its opportunity lies in advanced materials and thermal management, specifically chemical fluids required to cool high-density artificial intelligence and high-performance computing HPC data centers. It is the exclusive manufacturing partner for Chemours' proprietary Opteon two-phase immersion cooling fluid. It has built a dedicated facility at its Surat complex in Gujarat. Production is slated to commence in Q1 FY27, April-June 2026. AI chips like NVIDIA's Blackwell architecture push power densities beyond 3200 kilowatt per rack. Traditional air cooling hits a physical limit. So data centers must transition to liquid immersion cooling where server motherboards are completely submerged in non-conductive dielectric fluorinated fluid. High performance products, HPP, and advanced material command significantly higher EBITDA margins, often tracking north of 28 to 30% compared to their commodity divisions. So it's a often ignored part of data center theme, this stock, but thermal management is a very important part of this theme. Now, if you see this stock, steady rise from throughout this year, and now it has come to the all-time high, somewhere closer to 7,500. And if you see the same thing, right, it gets overbought, corrects, comes down, takes support at the 20/50-day moving average, and then goes up from there. So that is the way to trade. Stock becomes overbought, get out, take support, and then goes up. Next is Hitachi Energy. Navin Fluorine, as I told you, is around 58p. So still okay. Now, Hitachi Energy, strong capabilities across HVDC links. STATCOM is static synchronous compensator to prevent grid instability. Because what happens in a data center, the requirement of power is very high to very low at certain times. Hence, to prevent the grid instability, there's a big requirement of STATCOMs. Then digital substations, grid automation that enable large-scale, low-carbon power delivery to hyperscale campuses. Its technology portfolio helped manage highly volatile AI loads and integrate renewables and storage, positioning the company to benefit from rising grid and data center capex. It now provides the entire electrical value chain. This spans the initial high voltage grid connectivity, where they hold a 50% market share in India's HVDC market, down through transformers and gas insulated switchgears, and terminating at the server rack level power distribution. Hyperscalers require a strict 99.99% power availability standard. Hitachi combines its heavy electrical hardware with software algorithms, including digital twins and automated energy management, to handle the highly volatile load fluctuations caused by heavy AI training models. It is investing roughly 2,000 crore to construct a state-of-art large power transformer LPT factory in Karjan, Vadodara, Gujarat. This factory is specifically configured to build data-driven, digitally connected smart transformers optimized for AI data centers and high-voltage industrial grids. It is it closed out its fiscal timelines with an all-time high order backlog of 29,600 crore. Just for information, the FY26 revenue was 8160 crore. So that means it is roughly 3x FY26 revenue is its order backlog. It has successfully executed specialized data center contracts such as 3 into 220 kV AIS transformer bay extension for a mega data center cluster in Hyderabad. Now, if you see here, Hitachi Energy, if you see from that 16,000 odd levels, it is in a constant uptrend, and similar to as I showed you Nasdaq, right? It has doubled from this level, and it follows a predictable path, goes to the top of the trend line, corrects, comes to the bottom, then starts moving up. And similar thing happens with the RSI. So if you see, got oversold, moved up, got overbought, corrected, then again moved up, became overbought, corrected, then became overbought, again corrected, and now it is moving up. And in my opinion, in this uptrend, it should see 41,000 or 42,000, and then it should correct, come down to this 37,000, 36,000 level, and then again will start the uptrend if the business continuity remains. It's at a very high PE of 160, so a lot of future earnings are already priced in. Next is GE Vernova. It is into power evacuation, grid connectivity, and electrification required to plug massive power-hungry data center hubs into the grid. Hyperscalers cannot turn on a single new server rack without high-voltage grid substation gear. Its specialized gas-insulated switchgear GIS setups require up to 70% less physical space than traditional air-insulated switchgear, making them the default choice for modern urban data campuses. Its digital high-capacity transformers are engineered with embedded sensors to handle extreme load shifts without tripping or overheating, preserving the strict 99.9% uptime hyperscalers legally demand. Its T&D business, transmission and distribution business, integrates advanced grid automation software that allows data center operators to monitor power quality in real time and seamlessly shift load parameters between grid power and on-site backup renewable or thermal setups. 810 crore capex for expanding their Vadodara facility to boost transformer and reactor capacity by 50%. They are also setting up brand new facility in Vallam, Tamil Nadu to localize the manufacturing of advanced circuit breakers and disconnectors for the first time in India, significantly reducing lead times for project delivery. So they have a 21,456 crore order book. In FY26, they did around 6,200 crore of revenue. So order book is roughly 3.5 times their FY26 revenue. It's at around 111 PE right now. Again, though the trajectory is slightly lower as compared to the Hitachi, but it is also on an upward trajectory. And if you see here, it follows a similar path. Oversold, moves up, overbought, corrects to the moving averages, then again goes up, corrects, again goes up, correct. Now it is moving up. Moment it will become oversold, 75, 80p, will correct and come down and test the 20 EMA. So, right, so this is a very predictable pattern. And these stocks, because of strong revenue visibility of the future, next 3, 4, 5 years, they will just keep moving up. And not because of price action, also because there is a strong moat which is available to them, because there is hardly any competition at this scale for them. And anybody, Google, Microsoft, Apple, Nvidia coming to India will look for trusted and big players who can achieve whatever these guys are looking at. Next is Cummins India. Leading presence in high-capacity power backup systems, its data center-grade diesel gensets are built for critical high-load environments, offering rapid startup and high uptime aligned with hyperscaler and co-location standards. Engines like the QSK 60, QSK 78, and QSK 95 platform ranging up to 3000 kilowatt plus 3750 kVA plus are standard choices for large data halls due to their rapid load acceptance capabilities and reduced footprints. High horsepower generator sets and a complex engineering contract generally yield significantly better margins than standard industrial or commercial gensets. This structural shift towards large nodes is a primary driver behind the company's strong margin trajectory, extensive aftermarket service network, and system integration capabilities. These are the things which they possess. Now let's see their chart. So if you see here, it's moving up and constantly on an uptrend. Now, after the earnings, it corrected a bit, but then it took support at 20 EMA. So again, if you see, gets oversold, moves up, gets overbought, comes down, and this thing continues, gets overbought, corrected, and again it is trending upwards. So this is a similar trajectory for everyone. Right now, the AI theme is at the highest level, so it is moving on a upward trajectory. Now, if you are Cummins is the biggest player in this field, but if you see the other ones, Kirloskar oil engines, uh, all will be on the similar theme. So you can play with them and see what is the order book and order backlog for all of them. Cummins is at around 67p. Kirloskar oil engines is at slightly lower, but these are the leaders in the sector. Hence, they will get the higher multiple, etc. Next is Premier Energies. Indian data center build out alone will drive an additional 45 gigawatt to 137 gigawatt of solar module demand over the next decade. It is a leading integrated solar cell and module manufacturer, sits at the confluence of the AI megatrend and the renewable transition. Backed by a robust order book and an aggressive solar cell capacity expansion, the company is well placed for sustained medium-term earnings growth. Aggressive multi-year 12,000 crore capex strategy expanding vertically into a fully integrated solar major, with one of the few domestic players with massive backward integrated cell capacity shielding its order book from cheap Chinese imports. It is scaling up to 11.1 gigawatt of module capacity and 10.6 gigawatt of cell capacity. It is aggressively rolling out advanced N-type TOPCon cells and India's first zero bus bar OBB designs, which push cell efficiencies past 25%. It recently acquired controlling stakes in Transcon transformers and K Solar Energy solar inverters. So they are now also doing the backward forward integration into their field. Phased rollout into BESS packaging is taking place. Now, this one, Premier is at around 32.5 uh, PE. Now, if you see here, it was on a constant uptrend, then corrected because of the tariffs issue and some restrictions on import, though it had hardly any imports to the US. And this is where I was telling to buy this when it went to around 650, 60 levels. And after that, it has taken off, and now it is consolidating at around 1050 odd level. The reason why it is consolidating is because there is a QIP which is planned, so market is waiting for that to happen, and then after that it should take off. So this is the only thing. Now the next stock is Sirma SGS. It manufactures the high precision electronic system design and manufacturing ESDM components, high density printed circuit board assemblies PSBAs, and structural box builds that sit inside the server racks themselves. Under PLI scheme for telecom and networking products, it manufactures core routing and communication hardware. This includes switches, routers, and high-speed data transmission modems that orchestrate traffic inside the data hall and connect it to the broader fiber network. It manufactures uh, customs custom magnetic components, high-frequency transformers, chokes, and inductors that are built into server power supply units to ensure clean, efficient DC power reaches the processors. It has a 6,600 crore order book. Now, Sirma has FY26, they did around 4,800 crore of revenue, and it's at around 80p. Now, if you see the chart, It was normally moving around, and after that, it has just taken off with a lot of positive news related to their PCB business, and now it is slightly overbought. So it should correct, comes to its nearest moving averages, somewhere close to that. That should be an opportunity to buy this, and it will move predictably like this: overbought, oversold, moves up, overbought, corrects, then now it has moved up. So this is not the time to get into this. The simple daily chart just to see this. Next is Blue Star. Most critical operating constraints of high density computing is thermal management and integrated mechanical, electrical, and plumbing engineering. Thermal management in India is expanding into 2 billion to 2.5 billion capex opportunity. It manufactures dedicated data center chillers at its automated facility in Wada, Maharashtra. It secured large chiller orders from hyperscalers such as Adani and Yota. Its specialized data center chillers offer ultra-fast restart and rapid cooling to protect critical servers. It undertakes massive turnkey contracts covering its site assessment, master planning, heavy HVAC ducting, structural piping, electrical distribution, and complete facility commissioning. Its capability to design complex hyperonic loops and integrate advanced thermal architectures positions it well to absorb liquid cooling integration contracts as hyperscalers scale out their AI infrastructures in India. So it is moving into liquid cooling also. Uh, that is an adjacency for them, but basically it is does the air cooling part of the business and everything related to that. It's at a P of around 62, and because of this poor earnings due to slight amount of setback in the AC businesses for all of them, room AC, residential AC businesses. So it is in a downtrend, but it should benefit because of this. Because all data centers are not that 1 gigawatt and bigger ones. So the lower ones will require air cooling also. Already which are existing, that part will remain. So it is the best in this business. The chart suggests somewhere around this 1600 odd levels is a decent support, and from here it should take off. It was going up and then it corrected on Friday. So let's see what happens. Next is KRN heat exchanger and refrigeration. It supplies the fundamental engineering block of thermal management, the actual coils and heat exchangers that facilitate heat transfer. Cooling architecture is broadly split into two environments: the air side, macro facility room cooling, and the liquid side, direct to chip in rack cooling. KRN is moving aggressively to capture both. It provides customized copper, aluminum fin, and tube condenser and evaporator coils for traditional data center setups. So it is right now only in traditional data center setups. Management highlighted that they are expanding their portfolio into liquid cooling and coolant distribution units. It has effectively expanded its overall annual manufacturing capacity sixfold, scaling from roughly 1 million units to near 6 million units across product lines. But that is for the air side and not the liquid side. So one should be careful with this stock. It's at 106p, and it is now consolidating. There was a big buying with big volumes, huge volumes, and after that it has just stabilized, and the volumes have come down. So I think if you have to get this stock, you have to wait for a decent dip. Let it test this 50 or 100 EMA to get it. But I would be very careful this with these kind of stocks now, because the technology is changing for air cooling and liquid cooling now. Next is Polycap. A data center requires exponentially more heavy power cables, specialized instrumentation wires, and fiber optic networking lines than any standard industrial or commercial building. It is a top wires and cables player. Then it benefits from India's data center boom, where cabling makes up 8 to 10% of the project capex. 10 gigawatt data center deployment pipeline in India over the coming years translates to an estimated 30,000 crore market potential for cables and specialized power infrastructure alone. Its moved into extra high voltage solutions marks a strategic shift towards supporting grid modernization. EHV lines carry far superior operating margins, 14 to 50% than low voltage options. It has deployed an 800 crore capex layout to build out of state of the art extra high voltage cable plant. This facility is scheduled to be commissioned by end of calendar year 2026. Polycab is somewhere around 60p, and if you see constantly up move, and every dip has got bought, and now post April it has just moved up and now tested 10,000 mark, uh, which and it is now slightly overbought. So a dip to 9,500 should be a decent opportunity to get the stock, because this is a very predictable earnings stock with this kind of a theme. Though it is now slightly expensive, but that is a, and similarly with KEI and RR Kapil also similar themes. Next is E2E networks. With the tightening regulatory frameworks around financial services, healthcare, and public data, Indian enterprises cannot host sensitive data on foreign public clouds. So E2E's sovereign cloud platform ensures data is entirely processed within local jurisdictions. It acts as a cloud service provider, the tenant leasing out GPU compute. That is his business. This has enabled major partnerships such as their collaborative work with L&T Data Center and Cloud Business to power secured enterprise stacks. Its low-cost infrastructure enables it to compete with global hyperscalers like AWS or Azure. For Indian startups, boutique AI shops, and enterprises training models, this pricing structure removes massive barriers to entry, because 60-70% cheaper than if you have to get into AWS or Azure global hyperscalers, their data center. So that's why there's a lot of demand for their products. It recently went live with a next generation NVIDIA B200 clusters built on NVIDIA's certified reference architecture on their TIR AI ML platform, giving them an early mover advantage in hardware refresh cycles over standard data center players. So if you see here, the chart of E2E network uh, became overbought, then corrected. Some negative news was oversold, was in the dumps, and then it took off, and then again came down. And now with there was a news of split, and then it went up. And then it has corrected. Now went then tested the 20 EMA, and now it has again taken off. So uh, these are the stocks to be bought on dips. But if you see here, the moving averages have moved apart. So uh, it is a slightly risky stock to buy, but these have long-term potential. So you should be invested with these kind of stocks. So every dip becomes a buying opportunity, because trajectory is upwards. Next is NetWave Technology. It's the OEM that designs, builds, and cools the hardware going into these data centers. It's a primary deployment partner for NVIDIA's next generation architectures in India. As data center operators shift from older configurations to high density clusters, its Tyron AI systems and server platforms act as localized building blocks. So basically, if you see, E2E was giving the cloud platform. These guys are giving the servers. They're designing the whole hardware going into data centers. It is recently commissioned a brand new manufacturing facility specialized entirely in liquid cooled systems. This allows them to supply turnkey high density server configurations directly compatible with the next generation liquid topologies being designed by data center developers. Massive strategic AI clusters run roughly 150 to 200 basis points lower than their recurring high margin enterprise supercomputing businesses. The point is that the present AI clusters do not require much of work, hence, the margins have reduced for them. This was the principal driver behind the margin contraction observed in their latest Q4 FY26 earnings. The foundational anchor of its 2,400 crore L1 inclusive order book is a single monumental contract, roughly 1,700 crore, under the Government of India's AI mission. Scope of that project is design, assembling, and delivering sovereign cutting-edge AI server nodes domestically under the Make in India mandate. Now, these people do around 2,200 crore of revenue every year. So these are a decent revenue visibility, and net worth is somewhere around 140p. Now let's see their chart. Similar chart, overbought, corrected, took support at 200 EMA, and then it has taken off. So every time it becomes overbought, it corrects. Now it is heading up, go up maybe to 5,300, 400. Then it will correct, come to the nearest moving averages, 50 or 100, as they would also move up, and then it should take support. So that is the time to get into it. Right now the P is around 65.96. Sorry, RSI. So it will go up as there is some kind of interest, and then only it will correct once it goes above 70 odd. So I have finished today's session, basically covering most of the things. So if you see, you can divide the theme into 5 parts: civil engineering, turnkey construction, and power distribution is one. Second is power backup and infrastructure component level. Then thermal management and cooling. Fourth is renewable energy, and fifth is computing hardware and AI cloud layer. So we have covered most of the thing related to this. I have finished. We will take questions now.